Hi, my name is Mike Barrios with Integrity Home Finance. I'm a certified mortgage planning specialist, a certified liability advisor, and a founding faculty member of the National Institute of Financial Education. Today, our topic will be how to raise your credit score 100 points in 45 days. What makes up a credit score? It's your payment history, balances carried, your credit history, mix of accounts, and inquiries. Payment history is 35%. It takes into account how your bills are being paid, and it mostly focuses on the last 6 months. The highest weight on the highest pay history. Usually your mortgage is the highest payment. So if you fall behind on your mortgage payment, it makes a larger impact on your credit score versus a credit card. Balances carried is 30%. Keep them as low as possible. Outstanding balance versus available credit affects your credit score. In this illustration below, this person was given a $10,000 credit card. They owe $10,000. So this person owes 100% of their credit given to them. Now, if they leave it as it is, it's going to lower the credit score. If they spread the balance between two cards, 5,000 each, it's going to increase your credit score. Now, if you try to do that with installment loans or a mortgage, it has less of an impact on your credit score. Your credit history is 15%. The longer your credit history, the higher the credit score. Long credit history and paid as agreed, it has a positive impact on your credit score. Never close out credit accounts. Never close them out, especially if you've had them for a long time. It's going to decrease your credit score. The mix of accounts are 10%. It's ideal to have an installment and revolving account, mortgage loan, auto loan, 3 to 5 credit cards, and if you have a home equity line of credit, a second mortgage, HELOC, make sure it's more than 40,000 or it's going to report as a revolving account versus a mortgage. And inquiries. When you're shopping around for a car or a home loan, they need to pull multiple reports for mortgage and auto. One inquiry within 45 days for each. Each inquiry averages 5 points. Only the first 10 inquiries count each year, and after 10, it doesn't affect your credit score. Some of the credit checks that do not affect your score is if you're applying for a job and they check your credit, insurance, utilities, your creditor has an account review, and if you check your personal credit at annualcreditreport.com, it does not affect your credit score. And if credit card companies, if it's promotional and they do what's called a bullseye credit check, it does not affect your score. Blemish credit can be very costly. Low credit score equals a higher interest rate. A higher interest rate on your mortgage loans, a higher interest rate on your credit cards, auto loans, and insurance premiums. Some of the steps to take to increase your credit score is pay past due accounts, get rid of late payments, have credit limits increased, and do not close old accounts. Keep them all active. The past due accounts, pay all the past due accounts that are past due. Pay the accounts that are even 1 day late. Pay them before 30 days. They can severely hurt your credit score. Past due accounts do not include judgments and collection accounts. Have your late payments removed. Call the creditor, call the company and ask them if they can remove your credit score. It doesn't hurt to ask. Be very persistent. If you're persistent, you may get your wish. Always get a letter that documents the name, address, and account number, specific late to be removed, on their company letterhead with a signature. Try to increase your credit limits. Every 6 months, request an increase to credit limit on your credit accounts. Tell them how good you've been paying, and they should increase your credit score. However, if they have to pull your credit, then don't have them increase it. Because if they have to pull your credit to check how you've been paying on your other accounts, it will reduce your credit score. Do not close your accounts. Keep all your accounts open. Use the old accounts periodically. Charge a small amount and pay them off immediately. Even if it's $20 for gas, pay them off immediately. Because closing the accounts will decrease your credit score. In summary, borrow it, when you don't need it. Keep balance to limit ratio low. Back to the 30%, try to keep the balances under 30% of the limit. And when a creditor removes a late and provides a letter, try to do a rapid rescore, and we can do that for you. Never pay off a collection or a judgment when applying for a home loan. Increasing your credit score by 10 points may save you $100,000 over 30 years based on a $500,000 home loan. If you have any further questions or if you have any comments, please call us at 1-866-653-FUND. This is Mike Barrios with Integrity Home Finance, or visit us online at integrityhomefinance.com. Thank you.